Hey everyone, thanks for joining us for another episode of the weekly market update with your trusted real estate advisor, Rick Betancourt, Engel & Volkers, and Jake McCrae, Senior Loan Officer with Cardinal Financial. Today's topics are going to revolve around some things that we're finding as hotspots for a lot of our clients. They're concerned with the low inventory, and what's going to happen if I sell my home right now? How am I going to find another one? And am I going to spend more money? What's the interest rate going to be? How is that going to affect me? And why is it a good time to sell my home and move right now if they're thinking about it? So one of the first topics that we'd like to bring up is the short supply, which has been
huge issue right now.
Right, and that's
nationwide too. That's not just Florida. That's not just Vero Beach. That is a nationwide issue.
Right, and it seems to be due to the fact that people don't want to put their home on the market because where are they going to go? And that's what we want to try to help them with today. So I think there's a lot of misconceptions and everything out there. They're just kind of, not really sure what to do. And it seems like in any market, there are those misconceptions. So maybe we can lay some of them out today and help people kind of figure it out.
Absolutely.
If they were to sell their home and they were to take some of that equity in it, they could put that money down towards the purchase of the new home, or refinance the other home, or to buy an investment. Or
they could do a cash out refi to go buy another home, right, or another investment property like you're saying. Or, a lot of people are having struggles right now where they're just trying to make ends meet to pay the bills.
Right.
I see people that are taking cash out refis, whether, it's going to make their payment more or not, just because, they got to consolidate credit. They've racked up credit cards over the last, 3 years because COVID, they didn't, maybe they didn't work for a year, or they didn't work for 2 years.
Right.
So now they've taken out cash out refis to pay off that 20, 30, 40, 50 grand. Or like the area that we live in now, if you're buying in the downtown area or at some of these older homes, roofs are coming to the point where they need to be changed.
Many of them, yeah.
I mean, I'd say probably 40% of Vero is in that situation right now, and people are taking cash out refis for that reason to say,
right,
hey, I got to go buy a new roof for my house.
Right.
And of course, if you're going to sell that property, typically you're going to want to have that roof, fairly new. One, for insurance reasons, and two, just because that's what people look for. They want the most amount of years left on a roof to purchase the home.
Right. And they don't want to have to do it themselves. Like, they would much rather, it seems, buy the home with the roof, with the repairs, with the upgrades already done.
Turnkey.
Yeah. Just get in and enjoy life. Not have to worry about, fixing the roof and lowering my insurance and getting out of the Citizens plan and getting a different insurer and all that. They just want it to be done.
Yeah, I totally agree. And I think back to your point too, that, the one thing that people I keep hearing from my clients is I'm going to hold off. I'm going to wait until the rates come down.
Right.
And, the one thing I tell them is, you can wait for the rates to come down, but, you and everybody else are doing the same thing. They're waiting for the rates to come down. And as soon as those rates come down, there's going to be a flood into the market, which is going to up the demand of the limited supply that we already have.
True.
So one, that's going to make the home prices go up, and it's going to create bidding wars.
Right. It'll be a similar situation to 2021. I mean, the rates may not be that, not going to be that low, but it's going to be.
We are going down. Yeah. We're on the back end of the curve here now, right, which is
people
good.
Are starting to see it, and they're coming out, and I'm getting clients that were searching for homes here and there are getting more serious about it because they're seeing that drop in interest, and hey, maybe I'll be able to afford it now, but the rates are going to, or the home prices are going to go up. I mean, that's just supply and demand. That's just how it's going to work. And if people's homes aren't out there on the market and they're searching for the new one now, they're going to pay a lot more for it in the next 6 months.
Absolutely. I mean, that $300,000 house or $300,000 house you're approved for now, it's going to be $350,000 here in 6 months.
Yeah.
And, the other thing to think about too is, you might be able, let's say when the rates come down, you get approved for $350,000, but you get into a bidding war with somebody and then it's, $375,000 at the end of at the end of the day. You got to come out with $25,000 of your own money to make that contract happen.
Whereas today, you just need your, at most 20% down to purchase the home, but in most cases, much less cash out of pocket. They can get into the home. Yeah, rates come down. They can refinance it. And then they've got a lot more equity in the home because those values are going to go way up. So that $300,000 house, that's now $350,000. They've got an instant $50,000 sitting in the house.
Absolutely.
And they're decreasing their mortgage payment. So they're probably removing the PMI by refinancing with the lower rate.
Especially if you're going from FHA, because I mean, if you're in an FHA loan, the PMI is for the length of the full loan term. So you got to refi out of it anyway to take away PMI.
Yep, and that's a big. I mean, that could be on what, a $300,000-$400,000 house. That's a couple $100 a month,
without a doubt. I mean, $400 home. It's probably a $400,000 home. You're probably maybe $450.
Well, for the PMI, yeah. That really kills. I mean, that really kills the amount of income that you've got. I mean, think about if you had an extra $400 a month. That's you can go buy another car.
Not taking into account, the ups and the homeowners insurance and your property taxes if you're not on homestead too.
Right.
We always talk about in the lending industry is, you marry the house, you date the rate.
Yeah.
So, as long as people understand that, yes, you can refi out of these, high rates that we're into now, and you only have to wait 12 months typically to get out of those rates.
And that's really, I mean, you figure if the interest that they're paying over the 12 months, it's not a big deal when you're planning on staying in the house. Most people stay in their houses 10, 12 years. So yeah, the first year, maybe you're at a less advantageous rate, but the part that's not going to change is the price you paid for it originally. Right. So if they originally paid the $300,000, they get rid of the high interest rate, but they still only paid $300,000. That's never going to change. If they wait that year for the rates to come down, they can be at, yes, a little lower interest rate, but now they're paying $355,000. And so they just lost $50,000. And I'm sure
it's a balance of scales.
Right.
That's all it is.
And that interest rate's not going to, the higher interest rate payment over the year is probably not going to equal the extra $50,000,
Not in the first year, no.
Yeah.
But yeah, I totally agree with you. And I think the more people start to understand that, the more level out the market is right now. Because the other thing to think about is, if you're a buyer in this market and you're coming in, you're like, I might not have the closing costs just because of, or the down payment just because, I'm spending every nickel and dime I have just to stay afloat, but I need to get into a new house. Mm-hmm. Right now, you have kind of the ability to go to these sellers and be like, hey, like we're going to give you what you're asking, or maybe give a little lower or whatever it is, but we're looking for a concession to help us out, close this loan. And typically right now, people will do that.
Right.
Now, will you get the full 6% that you're allotted by law? Probably not.
No.
But will you get 1%, maybe 2%? Good chance.
Yeah.
And that could help somebody who, like, maybe, your closing costs with down payment are $30,000 and like, I only have 20 on me right now. How am I going to close this $10,000 gap rather than go and ask mom and dad for $10,000 or, Grandma Sue or whoever you're going to go ask for, that $10,000. You can get a concession to pay that $10,000 out from the seller.
Right.
That's a great option right now. But as soon as the prices go up and the demand is even more, you're not going to be able to do that anymore. So I was like, I have 4 other offers now.
Right. And they're not asking for any concession, and they're full price, and they're paying half cash or whatever.
Yeah, and it's probably you're gonna get back to the point where it's gonna be cash in hand at that point, rather than if you're an FHA buyer, if you're a conventional buyer, you're gonna lose out on those contracts.
Right. And you were talking about earlier a benefit of putting some of the cash from sales on their home into revocable trusts. Tell us a little bit about that, because I think that's something big. I don't think a lot of people, they think trusts are just for the uber wealthy and it's just where they put their money, but everyone should really have one. If you're over the age of 20, you should own one. It should be part of your life.
Especially if you have kids and a family.
Oh, even more so.
It's almost like life insurance and a will. Mm-hmm. Problem with a will is, and I'm not an attorney by any means, but with a will, you're still going into probate. With a
true, we see it all the time.
With a revocable trust, you will not. You'll skip the probate. But I know one of our talking points here today is going to be relocating. Mm-hmm. You have people that are relocating from, the Midwest, Northeast, California, Texas, down here to Florida. And what they can do, especially if they're at that age of retirement, where like if you're just taking Social Security or if you're just getting your 401k and your IRA, payouts, and let's say you're only getting $4,000 a month, you're more than likely not going to be able to buy anything unless you're putting a considerable down payment on, or if you're buying cash.
Right.
Now, what you can do is set up a revocable trust, and you can do that days prior to the contract. So it doesn't have to be set up for a year or two. You can do it just prior to contract. And the home that you have currently doesn't even need to be sold yet.
Right.
So what you can do is the proceeds of that home that you're selling are going to go into that revocable trust, and we're actually able to qualify that as income. Now, you have to have 37 months of funds in there to equal out 37 monthly payments.
Right.
You can also pay your closing costs out of there if you like. But it's just another way that if you're trying to get into, let's say you sold a $500,000 home up north and you're trying to get into another $500,000 home down here, but again, you only get $4,000 in retirement and Social Security payments.
Right.
You're not going to get into a $500,000 home. So you're able to basically track that income out of the revocable trust to qualify.
They could use, if their mortgage payment was $1,000 a month, you could use that as income.
Correct.
Excuse me. Pay for it. That's pretty good. So
it's a neat little tool.
Right. So if they were selling a home and they've got $400,000 in equity from the sale, and they put this into the trust, divided out over 37 months, that's almost 10 grand a month.
Yep.
So they would have almost, another 10 grand or whatever it would come out to be to add to that 4,000 a month in income.
Correct.
Right. Yeah. That's huge for people. That's huge.
And even if the other thing to think about too in this market is if you want to get your kid into a home that they can't get into, rather than giving them, let's say, you're a wealthy individual that, I just don't want to buy out the whole house, or I don't want to give them the down payment. You can take, basically an allotted amount into a revocable trust and do the same thing.
Oh, true.
To where, like, let's say your kid's works at a gas station or has a minimum wage job, you can use that and actually put the trust in their name, and they can show that as income to qualify for themselves.
Yep.
That way, you're also not a cosigner on your child's mortgage.
And that's something that they really can't follow it up in any way because it's in the trust, giving it to them as income to do this purchase.
And you can always be a beneficiary on the trust too, or a trustee on the trust too, to watch how those payments are made.
Right.
So you can track it without having to be a cosigner and be liable on the mortgage and on the.
That's a great thing for, say, like college students or somebody moving out of state to for school. They could go buy a home that's in the close enough to the school rather than them using student housing, and sell it when they're done with their 4 years, or rent it out and keep it as an investment.
Well, heck, you have them take one bedroom and then you rent out all the other ones.
Yeah.
I mean, it gets that child set up financially for life too, because now they have a financial vehicle to leverage against once they get out of college. I mean, talk about paying off student debt. I mean, that's one of the biggest things we run into in the lending business is a lot of people won't qualify because their student loans are through the roof.
Yeah.
And a lot of them have been deferred over the last, 3 or 4 years, to where their payments are, $1,000, $2,000, $3,000, especially if you're in the medical field.
Yeah.
They can be up to $5,000 a month. And it makes them unqualifiable for loans typically.
Yeah.
So that's another vehicle to where you can basically, do a cash out refi, or you can take money out of your mortgage to go pay those things off.
Yeah. And be done with it and have a clean slate and start their new life fresh with money in the bank.
Exactly.
Yeah. That's a good point. I wish I would have known that when I was younger. You know what I mean?
I wish I had that too.
That would have been great. Somebody would have told me that 20 years ago.
Right. And that's why we're here now, to teach other people.
So get them into it beforehand. So that brings up, relocating. We're going to talk about a little bit about relocating, where we're seeing people moving in from, like you said, California, Texas, the Midwest. We've always got people moving up from New England down here. I mean, it's just it's the way Florida is. We've got
especially Vero Beach.
We have a large influx, and people have found out about Vero Beach. So our population has been growing pretty rapidly over the past couple of years. We're no longer a hidden gem. We're a gem, not so hidden anymore. So we're seeing a lot of that come in here. And when relocating, they can use strategies like that, revocable trust, or taking the equity from the home and using it towards down payment to lower mortgage rates. And having someone that's local to help them through that process is a huge thing here. I mean, we have flood zones and coastal rules for homes that are on the water, and just a general knowledge. So when they're moving down here, I think having someone like us on their team to find the home, to figure out a way to maneuver through all of those different rules and regulations with insurance and requirements for, we're talking about putting new roofs on and all those. Finding those sort of things is a big help for people. I think that when they come, they're sometimes a little bit in the dark on that sort of stuff, and really need some guidance on it, like where and what to do when they're moving.
Well, and you brought up a good point with being local. The one thing that a lot of lenders and real estate agents that maybe they're licensed down here, but they live in Georgia, South Carolina, or New York, they don't understand how the insurance piece works down here, and how our property taxes work either.
Right.
You could have a same style home, same distance away from the water up there, and maybe the homeowners is $1,500 or $2,000. Down here, it's probably 3 times what that is.
Yeah.
I mean, our car insurance down here is typically about 3 times higher than it is anywhere else.
True.
So a lot of lenders and real estate agents don't take that into account down here. Like, well, we should be roughly here, but you're not in the local market. You're not selling homes or lending on homes down here, every day.
Yep.
Like we are.
Right. That we run into with lenders often when people bring a lender from out of the state and they don't know those insurance rules, and they're looking at the people's home and they quote their insurance so far off that when they get the quote from a Florida insurance company, it's $3,000 for the year more than this lender.
And now they can't qualify.
And now they don't qualify anymore, and they're upset. And they say, well, using a local lender who knows the local insurance brokers to give you a true quote on these things is a huge part of their mortgage piece.
Without a doubt. I mean, it's something that you even need to take into account of where you want to live in town.
Yeah.
You think you're coming down here selling your $500,000 home up north, like, well, I'm coming to move beachside.
Yeah.
And you're thinking, well, my payment should be, relatively the same. If I'm not buying another $500,000 house, your payments are going to be probably, an extra third more just because the insurance is so much higher down here.
Yeah. 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 Because I think a lot of people, Florida is its own on insurance. Like with the rest of the country, multiple states are grouped together in, say Allstate, State Farm, all those big companies. Well, when they come to Florida, it's only Allstate of Florida or State Farm of Florida. They only the premiums that are paid in the state of Florida pay out on the claims in the state of Florida. We're not getting money from anywhere else in the country because of the situation. We're basically all
they don't want to deal with our risks down here.
They do not, and that's why our car insurance and homeowners insurance. That's why they're all so high, because it's only us, and they just don't. They think it's all relative across the country, but it's not. And,
it's a totally different ballgame down here.
It really helps to have it laid out before they get into that whole home buying process and get an idea of what they need to do and what it might cost them, really, because it makes a big difference.
And I'll say, even before you find the home that you're going to put your the offer in on, like, I would recommend, just like I say, have people come talk to me or you,
Sure.
loan officer or real estate agent.
Right.
Talk to a home insurer before you go through the process to know, hey, like, if I have a $500,000 home, in, let's just say, the downtown area of Vero, what typically is going to be the price of insurance there compared to, maybe on, South Hudson Island or,
Right.
Up in Sebastian, like, well, what are the differences? That way you can kind of get an estimate of what your payment's going to be. Because I can tell you what your principal and interest is typically going to be, because I'll know what the rate and the purchase price is. But
Right.
I can give you an idea of what your homeowner is, but I won't be able to give you a definitive answer like somebody else will that's in that profession.
And does it require flood insurance? We're seeing a lot of flood insurance out there.
But you're not going to know that until you actually pick the property.
But and to throw this in, that flood insurance is transferable. A lot of people don't realize that, and they go and buy the home. I had a deal earlier where they had the transferable flood insurance, and the other agent didn't know that it was transferable. So that's so great. I had no idea. So sometimes that goes unsaid, and they lose that discount because you can transfer the low premium for the flood insurance to the new buyer. Most of the other insurances you can't.
Right.
This one you can save $1,000. You can save thousands a year,
especially because you got to pay that up front too. That's what a lot of people don't realize around here.
Yeah, that could be thousands out of your pocket day one at closing that you have to pay for that policy.
Yep.
Transferring it can be huge, especially for a coastal.
Oh, absolutely,
homes,
yeah.
Somebody that's lived in it for 10, 15 years and carried a flood policy, Now you want to hand to someone else, you could be talking a lot of money.
Oh, absolutely. Thousands, like you said.
Yeah, just something to put in there. The other thing we were talking about is benefits of downsizing, and that had a little bit to do with what we were talking about and the putting things into revocable trust and why downsizing might be a good idea. And people are out there doing the same thing, thinking, oh, I'm looking to downsize, but home prices are up and my interest rates are up. And I think it sort of goes along with everything we've been talking about here this morning. Just that, like, if they do find a place that they like and it's at a price that they think is a reasonable price, the way to get into it is not as difficult as they may seem. They may be able to use, we had talked about bridge loans one day. They'd be able to use a bridge loan or something. Hey, I'm going to put my home on the market. I know I own it free and clear, or I only owe $100,000 on my $600,000 house. I'm going to have $500 in equity, and I'm going and looking at a $700,000 condo. Well, they could get that bridge loan to pay off most of the new loan for
they
the $700,000.
They can pay it all off, to be honest. So you can put the bridge loan on there, basically cover what's left on the note,
right? And
then use that. And then as soon as you sell that home, the bridge loan gets paid off.
And then they would just have a small mortgage for $200,000.
Yeah,
on something like that
for the next home. Yeah,
right. So that would be a couple $100 a month they would be paying, and out of the big home that they were in, they no longer have the headache of all that maintenance, and they were able to downsize and get what they needed.
Without a doubt. Yeah.
So those bridge loans, they're interest only, right? And fairly easy to qualify for. Does someone need to do something like, put their money into the trust so that they show more income, or can they get that without showing all of the income because they're using the sale of the home to basically pay the loan off?
Typically, it's built off the equity, off the CLTV on it,
right.
But you do have to have pretty good credit. I mean, most of those programs start at like a 680 credit score, which isn't crazy high, but some of them, the ones that are going to be at lower rates, are usually around 720.
Okay.
So as long as you got pretty good credit, it's think of it almost like a home equity line, except for you have a loan that's going to cover your actual mortgage payments on that house.
Okay.
Rather than a home equity line, which is a whole nother payment that you're making on top of your mortgage.
Right. So their income isn't as crucial in there. So if they were living on, like they had Social Security and a pension or something like that, life insurance payment, whatever they might have paying out, that would, or 401ks, then that's not as crucial for them. That they can
I mean, you definitely got to show income, but it really comes down to the credit you have and the equity you have in your home.
All right.
And you can always do think about that too, as far as like moving. Like you can always, I talk about this all the time, like the cash out refis, where you can refi that house and then basically take that bulk of the money you're getting from the cash out and go buy that next home here too.
Right, and then when you sell it, pay off both loans.
Correct.
Pay off the second loan and the first one there. You see that a lot?
It's not something that people typically go into because people are scared of rate.
Okay.
But I think it's always a viable option, because if you need cash, on hand, if you're not selling you don't have the cash to go buy that next home until your proceeds happen from your current home, it's always a good option for that.
Right. Yeah. It seems like a lot of people are hanging in that balance right now, and if they're not out there searching, it's going to be an awakening when the interest rates drop there some more. We've already seen a little dip, right?
Last week we went down considerable. I think we were like 14 basis points, 15 basis points, which is a big deal in the market.
Yeah.
I mean, I think we're under the 8s now. We're back into the 7s, which is great. I mean, 2 weeks ago we hit a 9-point threshold. So, we're getting back down to, some semblance of normalcy here.
Huh. Well, maybe we'll talk a little bit about the number of homes coming on and off the market the next time too, to kind of to prove what we're saying, that as we move forward, the number of homes that are listed today, as opposed to how many homes were sold today, and that ratio there, that shows us how steady the market is, and whether we're in a buyer's market or a seller's market, which way we're going. And we never got all the way out of it being a seller's market. So the sellers
too many people moving down here in Florida.
The sellers are still hanging in, and then we're really going to move into that seller's market here coming up. So you need to be able to, maybe we can gauge that for everyone and just kind of show like where we're going with it.
Yeah, and I think next time too, let's talk about the HomeBot piece. It's something that
Mm.
both you and I are starting to use now,
Right.
and it'll help people that are wondering what the equity they have in their home is, and like
Yeah.
what's the appraisal value of their home at this point. Like you can look at like Zillow and stuff like that, but usually the estimates are
Way
$50,000 to $75,000 off of what it actually is.
Oh, it's true.
So yeah, we definitely got to dive in that next time because it's been an integral piece of helping me help my clients on both the seller and the buyer side.
Right.
Because you have the access to look at the MLS listings on there as well.
Well, yeah, I mean, and a lot of people selling their home, I mean, unless they already had the second home, they're buying another one, whether they're relocating, upgrading or downsizing, they're going to purchase. So having both sides there, figuring out where they may be at as a buyer and then what the equity is in their home. A lot of people don't, they guess maybe what sort of equity they have in their home, but the HomeBot's pretty neat where it adds in their loan and equity and tells them exactly how much after they pay off the loan that they may have. So there's a lot of good information in there. Definitely something to hit on.
Absolutely. And I mean, it's kind of like, if you have a Ameritrade or TD Ameritrade account or a stock account where like, I want to go on there and see how much money I've made.
It's
kind of that same thing.
Right.
Well, let's go look at the monthly report, see how much I made on my house.
Yeah, it's a lot of fun.
So it's kind of like that in a sense.
You just watch the dollars roll over.
Right. Like I'm just making passive income on my house that I did nothing to do unless you obviously upgrade your bathrooms or your kitchen or add a pool or stuff like that.
Yep.
But it is a really cool program that we use now.
We'll definitely dive into that one. That is really interesting. Maybe we could show a few clips from it or something like that. Show some screenshots, of what it is and what it can do for people.
I agree. Should definitely do that.
Well, hey, great talk today. I think we had some good information that people need to hear and may help them through this buying process with the dynamic market that we're in and the changes that we're seeing. Give them a little bit of insight there and maybe help them to move along before they're really like priced out of the market again.
Yeah, I agree. Don't wait.
Right.
Whatever you do, don't wait. Marry the house, date the rate.
So if you would like a value-added consultation, something where maybe you could talk about where you're at with your home now and what your goals for purchase are, Jake and I'd be happy to sit down with you and kind of go through some of those options with you. So give us a call. Contact information will be in the comments
section.
Yeah. All right.